All right. Today is Wednesday, June 16th. This is a recap for the stock market activities today. Folks, this video will be short and short and sweet. The apes went what? Short squeeze where? What's the ticker? Where? Relax. I'll throw a bunch of bananas on the floor and calm down. But we're going to keep it short and sweet because, unfortunately, I'm busy with a lot of things. You don't need to hear my problems. I'm pretty sure you got your own. Anyhow, today was the big day. The Federal Reserve's decision or lack thereof, because we got the same old, but with an important distinction. Let's start with the same old. No tapering. They're not going to taper anything. Oh, and by the way, if he's going to taper, this is Papa Jerome, by the way. He says, calm down. Don't worry about it. I'll let you know in advance when to leave the casino, or shall we say the nightclub, because it is a party. We're dancing. All of us are dancing, drunk, coked up, and some of us actually believe that the party can go on forever. Now, DJ Powell says, folks, keep dancing, keep the party going on, don't worry about anything. But when the party stops, the whole place will catch on fire. The party's not going to end right now, I assure you. Trust me. And when it's about to be over, I'm going to let you know in advance. Ask yourself a question. Are you that stupid to believe this moron? Of course not, at least the viewers of this channel. Assuming that Powell is telling the truth, and he will let us know, oh, how generous he is. He will let us know in advance when to leave the market. In this case, the nightclub. Even if that's true, the moment he says, folks, the party's about to be over, you got 20 minutes to leave, Actually, to live, right? Because the house is going to catch on fire. So you got 20 minutes to leave and live if you decide not to leave. What do you think is going to happen? The whole crowd will rush and run looking for the exit. And there are so many people, you can't fit them all inside one tiny, narrow exit. Some people will stampede and die. Others will not be able to leave in time, and they will get burned. So don't kid yourself here. And by the way, the truth is, before the dance floor catches on fire, DJ Powell will tell his VIP customers to leave the house first. And then let us know deadbeats when the party will be over, and we're going to stampede over each other looking for the exit. And a lot of us will get hurt. Apply the same analogy to the stock market. Powell will let his Wall Street buddies ahead of time when the tapering will start. But you and I will not get the memo until it's too late, because the Wall Streeters, the VIPs, will pull the rug ahead of time. And you and I will be left catching a falling knife and holding the bag. Back to the same old. Interest rates, the same. They're not going to raise interest rates right now. That was anticipated. But here is the difference this time around. Yes, it is the same old, but with a catch. Number one, Powell looked dazed and confused. At some points during the conference, he could not even answer the questions. He started to forget things, mumbling and stumbling all over the place, not giving any clarity. The man looked as if he lacks confidence in his own call that inflation is transitory and the supply chain will catch up with the demand, and don't worry about inflation at all. With the same breath, Mr. Powell says, well, Mr. Powell, we're not going to call him Mr. Jerome. How about that? Jerome said in a not so subtle way that interest rates will start rising sooner than expected, meaning before he told us they're not thinking about raising interest rates until 2024, which was laughable to begin with. Now, the expectations moved a little sooner to 2023. Wait a minute, Powell. If you say that inflation is going to be transitory and don't worry about it, then why talk about raising interest rates at all? If inflation is going to go away by 2023, it was just transitory. Why worry about interest rates at all? You liar. Pants on fire. Number three, so we talked about what's different. He looked confused and he said that interest rates are going to rise sooner than anticipated. Number three, he said and admitted that inflation is actually rising faster than they expected and stronger than they expected. According to their Fugazi formula, inflation is already at 2%. And we know when the Fed's formula says 2%, real inflation is actually at 8 to 10%. And then he said, this is number 4, we're going to retire the terminology of not thinking about tapering. That doesn't mean that we're thinking, by the way. We're just retiring the term. Are we going to use something different? talking about tapering. Okay, and here's the last point of what's different this time around when it came to the Fed's decision: the dot plot. What does that mean? The dot plots are the opinion, the survey of other Fed members. And when you look at the dot plot, some Fed members are now expecting interest rates to start rising by next year. And if that is the case, then tapering will happen a lot sooner than 2022, perhaps before the end of this year. Powell says, forget about the dot plot. We shouldn't even do a dot plot anymore. And the media, the propagandists over at CNBC and the likes, they're like, yeah, the hell with the dot plot. We don't need to use it anymore. These people are monsters. They're evil. That's what they are. We live in a democracy, damn it, last time I checked. And we deserve to know the opinion of other Fed members. We shouldn't rely on one dictator leading the Fed and spewing propaganda all over the place. We need to hear the thoughts of other Fed members. That is the least right that we have in a quote-unquote democracy. And by the way, let's find Bob Kaplan, buy him a few drinks, let him loose a little bit, and let's see what he thinks about this whole, we're not thinking about thinking, and now we're just talking about talking. It is disgusting. That's what it is. You have one of the hottest housing markets in history, one of the biggest housing bubbles ever, pricing out average Americans from attaining the American dream. Ladies and gentlemen, the American dream is dead, and it was dead long time ago. But Powell took a piss on the grave of the American dream of owning a shelter, a roof on top of the head of your family, safety, security, that you own a home. We're getting robbed from being able to attain that right. We're not saying, hey, government, please hand us free housing. We're not saying that. We will work hard, and we should be able to attain the American dream and buy a house, be able to afford a home for our families. Not in this market, juiced up with fake money printed out of thin air. For what? What is the purpose? They say, the Federal Reserve is helping the economic recovery, helping the average Joe and Jane, the common man, the poor and the middle class. You help them by creating inflation that is in essence an extra taxation, reducing their wages and their purchasing power, pricing them out of housing and home affordability. Even cars, vehicles are now out of the range of affordability for most Americans. You cannot afford a home. If you get kicked out of your home, you can't even live in a car. You're seeing states reopening and lifting the pandemic restrictions, including the evictions moratoriums. We're about to see one of the biggest waves of evictions and homelessness this country has ever seen. And you and I know that this housing bubble, which is already too inflated, now the Fed wouldn't even cut MBS purchases. All of what we're saying, dear Federal Reserve, start tapering at least the mortgage-backed securities purchases. Not all together, but at least by the tune of $10 to $20 billion a month. They wouldn't even do that. Why? It's not to help the poor and the middle class, because we know across the country, coast to coast, corporations and the rich, the 1%, are scooping properties all over the place. Why? There has to be some sinister reasoning behind corporations scooping single-family homes across the country, pricing out the average American from attaining the American dream of owning a house. Ask yourself a question. Does the Fed really work on behalf of the American voter, or is it an entity designed with one purpose: to preserve, protect, and inflate the assets of the wealthy, stocks and real estate? And by the way, the market, let's go back to the market because I'm about to have a heart attack. But you know what? In this inflation, even heart attacks are costing more. So let's avoid that and move on right away to the charts analysis. And let's see what the market thinks about the shit show that we got from the Fed today. But heed this warning. I cautioned a lot of you on Twitter. Do not make any moves right now because you're not sure how the market will react tomorrow and the week after when all of the data is processed. For now, we have a knee-jerk reaction. It could be right, it could be wrong. The market can interpret things in many different ways. For example, you can interpret this as, the Fed is ignoring the problem, inflation will get way hotter, and they're going to taper anyways. They're going to be forced to taper, and therefore let yields rally higher, let's pump the dollar, let's push the XLF, the financials, etc. higher. That could be one reaction. The other way could be, you know what? Jerome is extending the party, saying he's not going to taper, maybe he's not thinking about thinking, but he's not talking about talking, and let's rally the NASDAQ instead. Therefore, hold your horses Stick to the guns you already have and wait for more clarity. Anyhow, let's look at some charts here, starting with AMC, Apes United. We talked about the 60 level being the resistance, and I cautioned that perhaps we're seeing a head and shoulder formation. And if that is the case, then we will see lower prices. This is exactly what we saw. The name was down by the tune of about 10% or so at the lows of the day, but the appetite of buying call options is still here, meaning that the sentiment is not broken yet in this name. To scare the apes, you're going to need a drop of about 30, 40, perhaps 50% in a single day. That will start to shake out the overconfidence in the sentiment. But for now, here is what you need to know. Look at the options grid with the expiration of this Friday. The nearest call with the highest number of open interest, that will be the resistance, because if that number is hit by Friday, those market makers who sold these calls are going to have to sell their stocks. Remember, the volume has already traded a million times the available float, so this is an over-owned stock. The market maker has plenty of stocks in their positions, so when they sell calls, they're selling them as covered calls. Likewise, look at the options grid for the puts expiring this Friday. The nearest put with the highest open interest, that will be the support, at least for the short term. And the reason is, when market makers sell those puts, if the price is hit, they're going to have to buy the stock. Now, they can dump it right away. They can buy the stock and dump it right away. And therefore, in these kind of situations, the reaction at the support level isn't as trustworthy as the reaction at the resistance, the call with the highest open interest. Enough said. What about the SPY 30 minutes chart? The chart told us that the resistance is 425.45. We saw a rejection from that level and a semi-bear formation, bear flag formation, that started to play to the downside today. We saw a reaction at the support of 423, but that failed to hold as Jerome started to speak. Now support turns into resistance. The chart falls down, further down, all the way to the support of 420. 420 works. We see the reaction, the bounce right away, a big one. But it stops right at the former support, now resistance, of 423. For now, you have a range. Cracking above 423 will mean that perhaps this negative reaction for the SPY was transitory. And maybe we're going to rally the financials, industrials, the inflationary trade, the Freeport-McMoran, and the SPY will rally higher again. But violating the 420 support is a very ominous signal. I will perhaps say that the Fed will be forced to taper. Even if they say that we're not talking about talking, inflation will rise higher, it will surprise them, and they will be forced to taper before the end of the year. And guess what? Tapering might be good for bond yields, maybe financials, the KRE, regional banks, but it's not good for the market at all, or the market overall, I should say, because tapering is tightening the monetary policy. The market is hooked on the cocaine of the monetary policy. You remove the cocaine, you're going to see a negative reaction, not a positive one. But hold your horses, this is just 1 day worth of reactions. Moving on to the futures contract for the SPY, and this is again a 30 minutes chart. What you cannot see in the SPY's chart, but you are able to see in the futures chart is the following. The line in the sand has been violated to the downside, and this is a bearish signal, indicating that there is more pain to come. 4,232 was a magnificent level of resistance. The assumption is that it should have held as a strong level of support now that the chart is trading above that level. That failed. It shows the strength and the power of the downward move, violating such a strong level of resistance that turned into support. Not only that, but violating the next level, the very important level of 4,212.5. Not a good setup here, at least from this 1 day worth of reaction. Moving on to the Qs 30 minutes chart. The Qs went all the way closer to the resistance level that got rejected from 344.5, but reversed before reaching that level. That is an ominous bearish signal for day traders, at least. When you reach very close to a gap and then you reverse, doing a 180, that is an ominous signal. Likewise, when you reach very close to a resistance level and then you do a 180 to the downside, That is also an ominous signal. And the Qs managed to violate the 340 support, but the good news is the Qs managed to bounce back and reclaim 340 for support once again. On paper, the Nasdaq outperformed the SPY today. The reaction of the Nasdaq could be a bull trap because a lot of traders looked at the chart by the end of the day and said, wait a minute, the Nasdaq is in the green. Perhaps the market's interpretation of the Powell conference is that, hey, we have a license to go back to the dance floor, to the casino, and party once again by pumping the Nasdaq and high multiple names until the Federal Reserve announces ahead of time before tapering, warning us, hey, folks, time to stop. We're going to taper in about 3 months. Sounds too good to be true because it is. So be careful here, assuming that the Nasdaq will outperform the inflationary trade, or matter of fact, any assumption for now. For all we know, this is a knee-jerk reaction. Grab your popcorn and watch the show. And look for leading indicators like the US dollar, copper. We talked about copper last night, gold, and we will go over these charts once again. But before we do that, what about the continuous contract for the Nasdaq? Everybody thought that the chart of the Nasdaq can blast above 14,000 easily. And to the moon, bro. Not so fast. This is an important, sticky resistance level. You gotta pay it the respect it deserves by consolidating for at least a few days, if not few weeks, before blasting higher. This is exactly what we're seeing right now. The Nasdaq pulling back, saying, I'm sorry, I didn't mean any disrespect. I'm gonna spend the time needed before blasting above 14,000. That is at least for now. But what if the chart cracks below 13,718, then we'll know that this chart is perhaps forming a triple top formation. Moving on to the IWM, surprisingly outperforming the Nasdaq and the SPY today. We have a descending trend line. There was an attempt to crack above that line. It was successful for about 5 minutes, and then the chart went down again. We saw saucer bottoming, and now the chart is cracking above the descending line once again. At least from this very short-term perspective of 30 minutes, this is bullish behavior for the IWM, the Russell 2000. Absent of more information, we cannot say anything else about this chart. And here is the daily chart for the RUT, the Russell 2000. For now, the bulls have the advantage. The Russell is trading above 2,264. It is consolidating beneath the resistance level of 2,360. This is bullish behavior until and unless you crack below 2,264 once again. And here it is, the dollar index. Oh boy, what happened here? A massive pop higher, closing above 91, and perhaps if this momentum continues tomorrow, we could see the US dollar trading at around 92. The momentum indicators are strong with positive divergence, but what's important is, what is the US dollar trying to say? The US dollar is saying, who gives a shit about what Jerome Powell just said? I, the Dixie, looking through the bullshit, looking through the poker face, and I see a man who's afraid. I see a man who's nervous. I see a man who perhaps effed up. And I see a man who's going to be forced to taper even if he doesn't want to. And therefore, the US dollar popping higher. And this is, by the way, confusing to those inflation traditionalists who look back at the example of the 1970s and saying, whoa, wait a minute. If inflation is rising higher, shouldn't the US dollar go down and shouldn't gold rally? Why is gold down and the US dollar higher if the market is anticipating higher inflation? The reason is tapering. We did not have the tapering aspect back in the 1970s. We have this unique condition now, and it is changing the whole ball game. When the Fed lets inflation go out of hand and they get forced to taper, that will limit the flow of the currency, boosting its value higher. That is at least in the short term. But the damage from the tsunami of liquidity in the long term will push the US dollar downward. But of course, we know that the government, the federal government that is also hooked up on the Fed's cocaine, and the federal government cannot function without more debt accumulation. So they're going to figure out a way to work around this, and that will be via devaluing the US dollar. This is the long term. Speaking of, here is gold. Gold crashing today. Tell me again for the gold bugs. I love you guys and I like gold. I happen to hold physical gold myself. I'm not anti-gold at all. But gold has an inverse relationship with yields since the cocaine era started, meaning that gold is no longer a hedge against inflation, at least in the beginning stages of inflation, due to the inverse relationship with yields. Why does gold has this inverse relationship with yields? Once again, tapering gets into the process if the Fed is about to taper as a result of higher inflation. Then the US dollar will blast higher. That pushes gold down. This is at least in the short term. And therefore, I'm saying, in the long term, if this inflation indeed persists, then eventually the dollar will collapse again and gold will rally during the later stages of inflation. Perhaps during the stagflation stage. And what about Cooper? Here is a weekly chart. This has been the trade of the year. And guess who was a proponent since last year, last summer, telling everybody buy copper, buy copper, buy copper? The guy you're listening to right now. But now this trade is overextended, overloved, overcrowded, and we're seeing a natural, healthy correction in copper prices. Inflation deniers are creaming their pants, saying, you see, copper going down, inflation is gone. Okay, but you're not telling us about the year to date. Just look at the year to date gains in copper. Copper can go back to 420, even $3.77. Doesn't matter. It is still on a healthy upward trend. But for now, in the interim, if the US dollar is about to blast higher in anticipation of upcoming tapering, we will see pain in copper. No surprise here. And here is the chart of the day. What happened here? Yields blasting higher. This is a massive candle, closing above 1.55 basis points once again. I told you that the bonds market reaction the last couple of weeks right after the non-farm payroll report and the CPI is an overreaction. And now that is correcting in the most violent fashion. But when you switch to the TLT's chart, this is a weekly chart, by the way, it did not react that negatively at all. It was slightly lower. That is one piece of the puzzle, the mystery that is not solved yet. We have to see how bond traders react tomorrow after processing the information we got today. What about the VIX? Here is a 2 hours chart. We talked about the descending line of resistance. That has been broken, and the question is the VIX forming a new ascending line of support? If that is the case, then the VIX will be able to close above the level of 20 once again. And this is the back and forth. The VIX did not pop higher today significantly. And therefore, if you're betting against the SPY prematurely, based on the reaction today, be careful, because for all you know, wake up tomorrow, the SPY is higher and the VIX is down again because the market decided to look at something and interpret it in a totally different way. Hold your horses and watch out for leading indicators. One of those leading indicators is Apple, the big kahuna. As Apple goes, so will the NASDAQ. Well, there wasn't a lot of pain in Apple today. If the NASDAQ is about to crash, Apple is not saying so. Still holding and trading above 130. Watch this chart closely. Apple is a leading indicator for the NASDAQ. Moving on to Tesla, the souffle. The souffle was trading pretty good earlier in the day, but then we saw the reversal along with the entire market right after the Fed's decision, or lack thereof. Now understand this. If you are holding Tesla options, puts, or calls, you're getting hurt a lot. And the reason is, in this consolidation between the range of the 540 support and the 629 resistance, the decay of options premium is extreme. So if you bought them earlier, you're losing a lot of money. But this is the time to buy future call and put options, depending on how you see the chart trading, say 2 months from now, because all of this consolidation is a killer of implied volatility that pushes premiums down, the decay becomes extremely strong, and options become cheaper. So if you see Tesla trading higher by August, perhaps it's the time to buy some call options. Likewise, if you see Tesla getting crushed by August, perhaps this is the time to buy some put options. Moving on to tulips, BTC, Bitcoin. You know what's really funny? Last year, we dealt with the Robin Hoodiots, saying, you don't understand, bro. Hertz is the future, bro. Kodak is the future, bro. Sorrento, Innovo, some garbage name. Plug Power. Really? Plug Power was a mania name back in the dot-com bubble, you geniuses. Oh, now it's different. No, it's not different. Plug Power crashes once again. Anyhow, the Robin Hoodiots go mute. You don't hear from them anymore. But we continued to hear from the Bitcoin cult, the cryptomaniacs, Maniacs. Stay poor, bro. Crypto's the future. All the spams and the garbage, the filth. And then I made a video saying that Bitcoin will crash by over 50%. This is exactly what happened. But back then, the cryptomaniacs, you don't understand, bro. You're an amateur. What a moron, blah, 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 blah. Okay, it happens. It goes down by about 50%. Now, Bitcoin is trading a little higher. Didn't even close above 42,000. And the laser beams are back. They're confident once again. And you know what's going to happen. The Robinhoodians got slaughtered. The Bitcoiners will get slaughtered. The Dogecoiners will get slaughtered. The Rocketers, the SPACs, we told them. Be careful, Chamath is a scam. Be careful of investing in SPACs. Now we know the story. And now we're warning the apes. AMC will not be any different. But for now, the apes are empowered. You don't understand, bro. You're stupid. You're boomer. And it's going to end the same way. And the apes are going to go silent and hold the bag. Yada, yada, yada. But let's look at the tulips here. What's going on? Reversing before reaching 42,000. Not good. Not good. This is only a reaction that happened in a single day. We don't have a confirmation yet. So we're watching BTC carefully. If it starts trading down again tomorrow and by the end of the week, then we have a problem here. So watch out for Bitcoin. Again, not a hedge against inflation. And if it is, it should start to react by tomorrow. We should see a rally in BTC if it is indeed a hedge against inflation. Anyhow, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have the Philly Manufacturing Index, and what I'm watching for is the headline number. Is it going to be down again? And most importantly, what about prices paid? If the headline number goes down again, but prices paid go higher or even holding elevated levels, then we got a problem here. We got stagflation. Anyhow, I apologize for the short video today. It's not really short. It's longer than most YouTubers, but anyhow, I will resume the normal coverage tomorrow and attempt to revive the headlines of the day segment, at least during the weekend, because I want to talk more regarding the Fed's decision and the housing bubble. We have a lot of data, a lot of news regarding the housing bubble, and I want to comment on that, so I'm trying and attempting to revive the headlines of the day segment, at least during weekends. With that being said, thank you for watching. That's all I got for you tonight, and I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.